Good day, everyone. This is Patrick from Easy FX Code Trading System, and it's Saturday, the 20th of May, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of May. And just looking across all these three majors, the Euro, all the major pairs continued to weaken, which means likely the US dollar has been recovering back up. Only the cable has been trying to fight back a bit, but so it's dipped the least among the these three major pairs, with the Aussie also fighting back all on the Friday, and all finding key support levels. So we'll see what the major news are for this coming week, which is mainly driven by the US PCE price index that's on Friday, which is the Fed's preferred inflation figure to look at and consider. So, but meanwhile, let's also take a look at what drove the markets lower last week, and based on the some of the key news from last week. Well, last week was the only key news was the US retail sales, and which came out lower than expected, 0.4 versus 0.8% forecasted. But this still gave a boost to the US dollar and drove the majors lower. Perhaps it was mainly due to a positive figure compared to the last 2 months, 2 rounds, where it was negative. So it turned out that since it's positive, even though it's lower than expected, it was still a better than expected figure for the overall economy. So that perhaps gave a boost to the US dollar. And then on the UK job side, there was concern with higher than expected claims and also a higher rate. So that did not augur well for the UK economy. And the Eurozone and German ZEW figures was also lower. Confidence is lower there as well. Then on Thursday, the jobs figures for Australia was not good as well, with less jobs added, in fact, negative jobs added, and a higher unemployment rate. So that did not help the Australian economy outlook. And the surprise news on the Friday was the scheduled conference and the speech from Fed Chair Powell, where we were still talking about the Fed's target of 2% inflation. And although considering some of the banking issues recently, then there could be a balance with the possible pause. But at the moment, the inflation is still high, so there could be one more round of rate hike this next round in June before a possible pause. So we'll see. That's so the market took it better than expected as all the major pairs recovered on the Friday against the US dollar, with this possible hint of a pause after the next, perhaps one more rate hike in June, and then a pause for, we'll see whether it's one or two more meetings. So that was the only recovery made on Friday for the majors. This coming week is all about PMIs on Tuesday. All the major economies will be announcing their flash manufacturing and services PMIs. And the key one is on Friday with the US price index figure that the Fed is watching. In between, there's also the CPI figure for UK, which has been running high from about 9 to 10%. So this time the forecast is for only 8.2%. So we'll see whether it's able to dip lower. And there's also an outlook for the preliminary GDP for US. So let's see the key news again on the Friday. A lot of Friday news these past few weeks, with followed by durable goods orders as well. Okay, so let's move on to the majors and the analysis. Let's begin with the euro, where it had already dipped below the daily 55 EMA from the previous Friday, and then continued to weaken right below the 55 and the 108 round figure, down into this previous swing low, I guess. We'll check afterwards. Hit it exactly and managed to find support on the Friday with comments from Fed Chair Powell, and recovered somewhat back into the 55th retracement area and just slightly above the 108. And let's take a look at this swing low, which was all the way from here, from 3 years ago now, from this previous swing low area, just below the 108, and now it has reacted right at that level as well. So we'll see whether that's going to be just an interim temporary support, and whether it's going to continue lower and weaken further. For the week, let's take a look. On the week, it's still a bearish spinning top here, and it's still not a convincing pause yet. There could be further weakness. Next, it was close to the 62-fib retracement, so it may just continue to dip down to test that level. Not sure whether it's going to reach the weekly 55 EMA at around the 107 area. So let's see if it's able to recover back up, or whether it's going to dip down to 68 fib and then consolidate around the 108 area. But look at that, it's hit that support exactly. And this coming week, there's the flash PMIs for all the major economies on Tuesday, and it could be impact from the US PCE price index on Friday. And that's the forecast is at a 0.3%, and it's been running around 0.3 to 0.5% for a while. So we'll see whether it's going to maintain at that level or dip lower. If it's still holding around there, then chances of another rate hike for next month is still on the cards. Okay. So let's take a look and compare with the US dollar index, the DXY, see whether that has recovered as well and whether there's a inverse correlation with the euro. And here's the DXY, and indeed it does look like an inverse correlation still with the euro. After a pullback in the start of the week, it managed to pull back and find support right at where it broke out from this upper trend line of this ascending triangle. And on the Tuesday, that was the US retail sales figure. That's where it bounced from, and initially dipping lower and recovered all the way back up past the 103 resistance zone, and was actually heading towards the daily 200 EMA. But then on Friday, with the comments from Fed Chair Powell, it pulled back lower, back below the 103. So at least there's some follow through in the breakout, and we'll see whether there's enough momentum to carry it further down or up to the 62 fib, just like the euro. And taking a look on the weekly time frame, and it's blocked by the weekly 55 EMA, and still bullish spinning top, so there could be continuation move further. So this breakout from this support level now, that's confirmed as a key support now. Let's mark this as support. And likely resistance zone up at the 62 fib, along with the daily 200 EMA. Okay. Right, there could be some pullback at the start of the week before a continuation move up to try to test the 62, whether it's able to reach there. If it does push through higher, there's another resistance level, probably from a swing low. Let's check that. So it does try to climb up higher. It's all the way back multi-year from 2016, and there was a swing high tested twice before. And let's extend this further out. And that's at the 103.75 area. Yeah, that's only if it's able to break through the 62 fib retracement. All right. Let's move back to the other majors. Let's move on to the cable, where after initial bounce at the start of the week from the previous swing high up here at 100 fib, it weakened, continued to weaken, and then fell all the way until it found support at the daily 55 EMA, exactly there, where it managed to find support on Friday and recovered somewhat. So this is an interim support area. Next major support at the 786 pip with along with the 123 round figure. And below that, there's a swing high area here. But let's see, that was the break of the trend line, attempted break on Wednesday, pull back higher, and Thursday it dipped lower, and Friday it pulled back to retest. So there could still be further weakness, and finally break of this daily 55 EMA down to 786. Let's see how much lower it will fall, if it does fall, and whether it's going to continue to find support from the daily 55, and it needs to climb back up above the 125 to recover. And it needs to get some relief from the UK CPI figure on Wednesday. Forecast is lower now at 8.2%, where it's been running from 9 to 10% for the last few months, for quite a few months already. So it needs to weaken. And then there's also exposure on Friday from the US inflation side. Okay, so let's move resistance at the 125 now. That's a key resistance. And we do have support at the 123, as well as just below that at the daily 200 at 122.38 area. So let's see, maybe probably in between this zone here. But critical that if it does not recover back up above 125, then it's either going to consolidate or dip below down to close to the 123, and perhaps consolidate that zone between the 100 and the 786 pips. On the weekly time frame, it closed as a doji, so it's not a convincing falls here, so there could be further bearish momentum to dip lower. So critical week coming up for the cable and the sterling pairs. Okay, let's move on to the Aussie dollar, where it's also trying to hang on. It climbed up to retest the 67 round figure, and that was it's now an interim resistance zone before falling back down into support just slightly above 66. So it did dip down below this zone and climb back into that zone now to close the week. So this is an interim resistance zone at 67 and a key support at 66. And well above that, the key resistance at 68, as well as the daily 200 dipping lower. The 55 is dipping into the 67 area. On the weekly time frame, close as a doji, and this needs to recover a bit more to break above 67. Otherwise, it's likely going to consolidate between 66 and 67. But for now, it's hanging on, finding support. And this was the breakdown from this lower trend line. So yes, it needs to climb back up above the 67 and the daily 55 EMA and the trend line so that it's able to recover from the lows here. All right, so it's also exposed to the US news, and we'll see how much it's able to recover or whether it's going to sink lower. It's going to be quite a massive issue if it does drop below the swing low at 65, 64. And it's needs to find strong support at 65.00. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week. And cheers for now.